Everyone's looking for a great deal when it comes to investing in real estate. But honestly, it's pretty hard these days. There are a few ways to find a good deal, but looking for a fully done-up home that has much better than average investment returns is pretty hard because you are competing with a lot of people in Toronto, and so the market dictates the price, which usually means it ends up being an average deal, which is still very decent most of the time and likely to outperform investing in the stock index. But if you are willing to put in some elbow grease and perhaps more importantly, really understand what types of homes have the highest potential for much better returns, that's when you end up getting that extraordinary investment opportunity. In this video, let's dig into how this is done so that you know what to look for. So if you're ready to put in the work, let's dive in. The average starter rental house in Toronto today might have a purchase price of $1.05 million and a net operating income of $50,000 per year. So in other words, the cap rate, as real estate investors call it, which is basically your NOI divided by your property value before you take into account financing costs and leverage, ends up being around 4.7% today. With our current interest rates, this ends up being slightly negative cash flowing based on a 20% down payment. Now, as a whole, you do benefit from principal pay down as you pay off your mortgage each month, and the big one, long-term appreciation. And so real estate numbers can still look pretty good, like I mentioned. But here's the big question. How can you improve these numbers to make them better than average? Now, if you are looking to increase your rental income, the easiest way to do so is by adding in extra bedrooms. And the key is to find a layout that makes this really straightforward. A lot of times, renters don't care as much about a separate dining room and a separate living room, and so rents don't actually change as much if you have one or two of those. But if you end up converting one of those into an extra bedroom, that ends up being a substantial bump in rents. And so once you understand this, the ease of carving out an extra bedroom could be key in substantially increasing your rental income. Let's take a look at this example. Let's say you have an existing one-bedroom unit that rents out for $2,000 per month. By converting it into a two-bedroom home, then you could substantially raise the rents to $2,400 per month or $4,800 per year, and a huge return when you annualize it as a percentage. If you build that into cap rates, your cap rate does go from 4.7% to above 5%, and now you're cash flowing slightly positive, so you've lowered your risk that way, and you've also improved your investment returns with this relatively simple renovation. Next, making cosmetic upgrades to kitchens and baths is also another team favorite. If you change up a kitchen for around $10,000, it's definitely possible to get an extra $200 in rent a month. Now, nothing beats that extra bedroom renovation, but this is still a very impressive return on an annualized basis. Just like adding extra bedrooms, the cap rate does go up, and so you do improve your risk-adjusted returns this way too. Next, splitting a home into more units is also well worth it. For $50,000, you might be able to add an extra secondary suite to a house, and look at these numbers. If you add a basement apartment in, that's an extra $1,600 bump in rents per month, which ends up being a 34% annualized return. You'll see that our budget is going up, and next up is something that we think not everyone will be willing to take on because it is in the semi-development space. But if you are willing to take on these bigger projects, your absolute returns do end up being much better. And so this could be something you might want to consider sometime down the road. Now, here's an example. Renting out a garage might give you $150 of rent each month. But if you convert that into a 3-bedroom Laneway suite, which costs around $400,000 to build, your rent would go up to $3,500 per month, and that house alone would have a cap rate of 10.5%, which is extremely impressive. Now, most people don't fork out this money out of pocket, but they either finance it through a HELOC or refinance another existing property. So once you take into account leverage and also appreciation on that house as well, it would definitely be worth it if you are willing to take on something like this. So hopefully this video has given you better insights in terms of what real estate investors go through. The most reliable way to find a great deal comes from a combination of knowing what to look for and being willing to take on work as well. And the truth is, this does require a lot of work, expertise, and understanding the local market, analyzing layouts and site plans of every single individual property to see what's possible and realizing what type of work actually creates the most value. But this is where our expertise comes in. As a Toronto real estate investment sales brokerage, we search our local market every single day looking for these opportunities for our clients. And so if you are looking to learn more about how we can help you achieve your real estate investment goals, we would be more than happy to chat with you privately. So just simply head to this link right here to book a time to speak with us directly. If you enjoyed this video and you want to learn more about real estate investing in Toronto, be sure to give us a like and definitely subscribe to our channel. We cover a wide variety of topics from market trends to housing policy to interest rates to investment strategies, and our goal is to make real estate investing as easy as possible for you, which is why we also offer a range of services to support you through your whole entire real estate investing process, from planning to analysis to sales, renovations, leasing, and property management. We've got you covered. Just check us out on our website or find us on social media. Thanks so much for watching, and we'll see you in the next one. Bye.